The fourth quarter was an interesting one. We had a pretty good summer through the first part, but September there was an aggressive sell-off. But once the fourth quarter and October rolled around, all those concerns were out the window, and it was back to the races. We had some hiccups along the way around Thanksgiving when the news of the Omicron variant popped up, and then again after the Federal Reserve had its meeting in the middle of December and indicated the possibility of rate hikes in 2022, had a short-term impact on the market. But again, things recovered fairly quickly, and we were setting new highs at the end of the year. So overall, just a very positive from an investor's perspective fourth quarter, and one that perhaps was a little surprising after the way that the third quarter wrapped up.
The fourth quarter of 21 marked an important period as governments around the world began to embark upon the process of reversing accommodative measures to curb inflationary pressures. For example, the Fed announced its intention to reverse the balance sheet expansion while providing guidance of their intent to raise interest rates over the next upcoming year. We do expect potential bond market volatility and rising interest rates. We have taken steps in the Sustainable Bond Fund to position defensively. Over the past quarter, the fund has raised cash to a position around 17%, reducing bonds in the BBB and BB category. The excess cash reflects the expectations of higher volatility, potentially rising yields, and as a result, better opportunities to enter the market.
Much of a focus of attention during the course of the year, particularly in the second half of the year, has been inflation. But there's a pretty good argument to be made that inflation was primarily a meteorological phenomenon. We had quite a number of disruptive events, starting with the big freeze in Texas. We had a very severe drought in Brazil and Argentina. And then in our summer here in North America, we had pretty severe drought in the West that closed hydropower plants. And then, of course, we had the fires that drove lumber prices higher, and then floods in the Pacific Northwest in November that drove lumber prices higher again, droughts in China, the flooding in Germany, all kinds of things that just affected both production and distribution of hard and soft commodities throughout the year. Meteorological impacts, I think, in inflation certainly can't be dismissed, and we have to consider what the future impact will be as temperatures continue to rise around the globe.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting SaturnaSustainable.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Saturna Sustainable Funds in a free prospectus or summary prospectus, please visit SaturnaSustainable.com or call 1-800-728-8762.